difference between revenue and profit. These two terms are often used interchangeably by those in the business world that will never make the kind of profit that matters. Welcome to Scaling for Success. We are all about helping businesses grow profitably, scale and move to the next level. If you're looking for consultancy and mentorship that really makes a difference, subscribe to our channel or visit the Scaling Management Consulting Group website. The links are in the description below. In today's video, we are asking, does your business make this type of profit? Okay, so don't worry, you're not alone. There are tons of business terms out there that are commonly confused and often misused, even by those who have plenty of skin in the game. Everyone's heard mention of profits and revenue, and what might seem like a complex concept is actually not that hard to get your head around. You don't need to be fluent in business speak and economical jargon, and running a business is something that anyone can do regardless of experience, provided that you have ambitious drive and the true soul of an entrepreneur. So sweep away those imposter syndrome thoughts and start focusing on making the type of profit that you deserve. So first up, the boring bit, the definitions of the terms, what they mean, and that sort of thing. Let's take revenue to start. Technically, this is the cumulative amount of income from your company adding to the coffers before any expenses are being considered. Literally, you add up all the streams of income and boom, total revenue. Easy math. Now, net profit is the real and infinitely more important number, and this is what you are actually making at the end of the month when the fat lady is singing. And again, simple equation, subtract the total expenses from the total revenue, and what you have left is the net amount or profit. This includes every business cost and doesn't abide any selectivity of reporting. This is where the numbers start telling the real story. The net profit margin is a percentage that shows how much of that big total revenue number is going to the bank and staying there. You take the total revenue, subtract the total expense costs, and divide by the total revenue. We have to add that not all profit types are made equal. Net profit is the one to look at, but others are often used instead to cook the numbers just a little bit. Gross profit is the total sales minus the cost of goods sold, not counting any other expenses, for example. Operational profit is the gross profit minus any business expenses like rent for the premises, a utility bill, the marketing budget, and any depreciation, amortization, or write-off costs for tax purposes. So no wages, no accounting, no consultancy costs. So let's run through a few examples and you'll see what we mean. Let's say a small business makes $1 million in revenue for the financial year. A pretty impressive figure for a company just starting out, right? Now we find out that after all expenses are considered, they amount to $900,000. So in reality, they've only banked $100,000 out of that initial $1 million. That's a 10% profit margin, which is kind of skinny. Let's look at another business. Now they're bringing in $200,000 a year. Their expenses are only $75,000 when everything's subtracted from their total revenue. It gives them a profit of $125,000. They're actually making $25,000 a year more when compared to the other company, due to the fact that their profit margin is sitting around 62.5%. Now, we get what you're thinking, you catch on fast. Revenue numbers are much flashier and more impressive than net profit numbers. So there's a temptation to use them more in reports, slideshows, presentations to stakeholders, etc., in order to really talk about how the business is doing, while not exactly lying about it at the same time, but not being giving the total picture. Though there is technically nothing wrong with presenting a business in terms of the raw figure, it's a rather sneaky way of doing business. So when you understand that you can generate revenue without actually turning a profit, but you can't generate a profit without sufficient revenue, then you start to see why. A business with a huge amount of revenue may actually be running at a loss if the costs of the operation exceed the amount of money coming in. But on the other hand, sometimes this is done out of pure ignorance and not at all purposefully. So as a business owner, if you're only looking at revenue numbers, you may not be giving yourself the full picture. You may not be getting the full meaning. So let's get excited about all that money coming in without even considering how much is going out is an easy trap to fall into when there are things hanging over your head like rent, materials, manufacturing, wages, consultancy fees, loan repayments. Well, you know, the list goes on and on. It's very easy to focus on boosting the overall revenue while forgetting about the other side of the coin, which is limiting expenses as much as possible to keep that profit margin percentage nice and high. It's a trap that many greenhorn entrepreneurs make when starting up a company, especially when there are insufficient processes in place to track and record business expenditures, and then using the data to present an accurate health status of the company itself. Now, are you getting the picture? Referring to our examples again for another minute. One company is likely to be run in a completely different manner than the other one. They might have different business ideologies altogether. But also consider the fact that the raw numbers don't always tell the whole story. And here's why. Bumping up the advertising and marketing budget in order to pierce deeper into a target market will more often than not boost total revenue, which is fantastic. Who doesn't want that? Where this wouldn't be economically viable, for instance, would be if the additional marketing horsepower did not bring in enough new business to cover the actual expense of the campaign. Another way of looking at it would be to push aside the short-term gains and losses from the endeavor for just a moment and look at the bigger picture overall. The push into the market may yield results that are attached to a delayed fuse. The business may not see immediate benefit from the brand spanking new, an aggressive marketing campaign, but in years 2, 3, 4, maybe more, there may be a steady upward trend in total revenue that would soon eclipse the additional cost and the shift the business from the red line substantially into that black line. This reinvestment of profits for future gains is a hard one to track on the profit and loss statement. What may seem like a big chunk of the kitty dedicated to growth products may eventually be looked at as chump change in coming years. So long as the business is making a healthy enough profit to sustain it, scaling up and throwing money at things like research and development of other product lines, the introduction of newly offered services, and perhaps changing it up a bit and dedicating a pocket of the business to venture into a whole other market, these may be great ways to turn the kind of profit you're after. Do keep in mind, though, that the stakeholders in your business will need some convincing. If the profits take a short-term dip, it's up to the captain of the ship to reassure them, explain the rationale behind the new plan, and then sell them on the dream for exponentially greater profits in the future. So after hearing all that, ask yourself this: what sort of profits are you turning in your business? Is it one that gives you a true account of the current state of play? Or is it one that sounds really good on paper, but doesn't actually capture how the business is doing in the right here, right now? Though it is good to be focused on the numbers that will more accurately portray how well your business is doing and knowing the difference between them, don't let the mindset put the blinkers on and blind you to opportunities for growth. Get your financial house in order, crunch the numbers, and if you have the profit headroom, start thinking about scaling up. That's all we have time for in today's video. Does your business make this type of profit?
Like this video if you found it helpful. And for more content just like this, subscribe to our channel or visit the Scaling Management Consultant Group website at scalinggrp.com or our new website at scalingresources.com.